So when we represent buyers and sellers, deals that are going through under 5 million, traditionally bought by high net worth individuals, not necessarily private equity, and they traditionally go get financed through an SBA loan. And there's some red flags the SBA will look at from a buyer's point of view and a seller's point of view. And whatever side you're on, you want to make sure that you're mitigating those red flags so the financing can go through and it comes in at the right amount and there's no hiccups, there's no at the last minute need to put down 30% or 40% on a deal. And so when we look at red flags from the seller's point of view, we really need to be focused on earnings and making sure there's flat or steady growth curve on what earnings look like the past few years. If you have a volatility that you're at 1 million 2 years ago, $500,000 last year, and this year you might be at 600, 700,000, the SBA doesn't take an average. They look at the most recent year and the most recent data, how the business is going to perform in the future. And so when they calculate a loan and they look at what risk premium to put on the interest rate, and whether it's a 7-year or 10-year note, if you're looking at it 600,000 in earnings versus $1 million in earnings, it really makes a huge difference on what the SBA is willing to lend at and maximum loan amount. That's a big difference between a $3.5 million deal or a $5 million deal. And if you're a seller and you're trying to retire, that is an enormous amount of wealth for how you're going to live the rest of your life. And so from a seller's point of view, you need to really take time to make sure you're on that flat or upward trajectory, and you need to time the sale of the business so that you can paint the best picture of performance going with the lender. So two other things that the lender looks at is customer concentration. If you have a customer that accounts for 20% of annual revenue, if you have customers that come in and out and disappear that are a sizable portion of annual revenue, it just means that it's a pretty risky business year to year, that you don't have a lot of stickiness with clients. And that means ultimately earnings could be quite volatile going forward. The other big piece is reliance on key employees. Who does what in the business? If the owners are heavily involved, owner does 80% of the sales or is critical to product development or operations, owners need to be working themselves out of a job and be working on the business, not in the business. From the seller's point of view, earnings volatility, reliance on key employees, customer concentration, those are the three things that you really need to take care of and shore up before you time the sale of the business. So now going and looking at the buyer's point of view, the lender is going to say, do you have experience to run this business? Have you been working your entire life and now you don't want to go work? How are you going to paint the story that you can manage the business you want to buy and really excel from a competence standpoint? You understand how the business runs, the technicals, ins and outs, the leadership of people, and then the financial capability. Do you have the funds to put down money for a down payment? Do you have collateral should things go sideways that the bank is going to feel more comfortable lending you to? These two things, if you're a party of this or an advisor in this, you need to be aware of what are those red flags on the buyer side, the seller side, and try to mitigate those when a LOI gets signed. We have high confidence that purchase and sale agreement is going to go through and the financing and lending is going to go through and everybody's going to be happy. Except lawyers. Nobody likes to be spending money on lawyers for no reason and starting from scratch to go find another buyer or to go find another business to buy. Really important that you take a look and talk with SBA lenders, identify those red flags up front, get to know lenders and have a few that you can work with because they all operate a little bit differently. They all interpret the SBA rules a little differently. The 50 basis point drop was great. Each bank has a different risk premium. So it's good to know and work with a lot of different banks. If you need help thinking about and strategizing how to get financing done and how to shore up a business from the buy side or sell side point of view for getting rid of those red flags, contact us, info@exitequity.com, or contact me, Phil@exitequity.com at any time. And we try to put a team together. And if we need to bring outside resources, happy to make introductions to bring the right team together to make a deal happen.